A very good morning to you. It's Trade Live with IG. It's Monday, the 6th of October. And if you are invested in Japan, you are having a very good morning. As am I, because I am sat with Chris Beecham.
Oh, you're too kind. You're too kind.
Our expert in Japan.
Yes, not really. Well, as of this morning, you know, I'm doing my reading all over the weekend.
Yeah. Yeah, very exciting. So we'll certainly be talking about that coming up. We'll also be talking about, well, what else is coming up on today's show? We're about to see. I've got Elliot Harris in after Beachy's finished giving us all his huge value added.
I'm so exhausted.
So that's going to be live from the trade desk this morning, myself and Elliot. And then Angeline will come back in to do the US opening. Well, no, what are we calling it now? We still haven't really settled on a name for it. Any ideas what we should call this new 9 a.m. US pre-market? Because we've obviously got 24-hour prices, but we've also at 8 a.m. they reset for the next day. So I don't know what 9 a.m. is anymore.
Time has no meaning anymore, does it? It's just one endless betting session.
24/5.
There's no pre-market anymore, is there? It's no, like the good old days.
And then technically speaking, and trade of the week there with Axel Rudolph. What's it going to be? Is Axel going to be dipping his toe into...
He won't be dipping his toe into anything after twisting his ankle.
Oh, what happened?
He twisted his ankle last week, unfortunately. Probably playing tennis, is my guess.
Oh, no.
But, so he's currently not bedbound, but not very mobile.
Right.
So he won't be dipping his toe into anything.
So have we got him from home this morning?
Live from home, yes. Live from his
brilliant.
bed even, maybe.
Oh, dear. We'll have to get the full story on that. Right, Chris Beecham. I have a treat for you this morning.
Oh.
Which is actually a treat for me.
Oh. Because
tomorrow I have something that I've been waiting for 6 months, and I'm hoping it's going to be my most exciting day of the year, which is normally Cheltenham. But if we want to take a look at my screen, this is where I am off to tomorrow to get into.
You going in that?
Getting into that.
Oh, I hate you.
And I've written to them already because my grandfather was the rear gunner.
Right.
So I've written and asked if I can go in the rear turret.
Right.
And they said, at the moment, nobody else has requested it, so you're good.
Right.
But if somebody does, you're going to have to draw lots.
Right.
And basically, if somebody else has the same family connection.
How have you swung this?
So it is actually a thing. You can. It's expensive.
Yeah.
Like 500 quid. But you.
Is that all?
That's all. Good value, isn't it?
It's my birthday sorted next year.
So there's but you do have to book 6 months ahead.
Oh, that's fair enough.
Yeah. So there's 10 people go in at a time.
Yeah.
And then there's 2, shall we call them sorties?
Yeah.
You've
got your biggest helmet ready, haven't you?
Oh yeah, full kit. So yeah, 10 in the morning, and then that 10. Well, you all have lunch together, and then you watch the afternoon one.
Yeah. Where
the other 10 people go. So I don't know if I'll be in the morning.
Where's that done? Up in Lincolnshire?
Lincoln, yeah, East Kirby.
Oh, okay.
So I have to get the train up there this afternoon.
Yeah.
And I haven't booked a hotel yet, but get bed and breakfast somewhere around, because we got to be there at 8:30 in the morning. So
yeah. Well, Lincoln's lovely. It's a nice city to go to. But that's amazing. Yeah. Very exciting.
So any questions for me to ask them?
Oh, I don't know. I have to think of a couple.
Yeah. So that's.
Are you allowed to film from it? Can you live stream your? Can you trade from a Lancaster? Can we get you trading from a Lancaster?
What would I trade?
Can you trade?
It's obviously
Rolls
got to be a
Royce?
defence stock, doesn't it? The Wisdom Tree European Defence ETF. There
Yeah,
we
exactly.
go. So that's my day, but we got a lot to talk about here with Japan. So let's go into overnight action. Right, so let's get straight into it. Japan up 4.9% overnight. We've got a real weakening of the Japanese yen by 1.9% against the dollar. That is, of course, because Maggie Thatcher is back. The Sanai Takachi is the new Prime Minister of Japan. Says that she's been inspired by Thatcher. But to be honest, looking at her policies, that's pretty much where it ends. Yes, she's on the right. but what she's actually planning to do isn't quite Thatcheresque.
Right. Just sounds good.
Yeah, it does. It's a great. It brings it to the UK. It explains what she's trying to do. But bond market a little bit concerned.
She was once a drummer in a heavy metal band. Sorry, market related, according to the BBC that I'm just reading now. Sorry, carry on.
Yeah, bond market's a little bit concerned because it does lessen the chance of Bank of Japan raising rates to try and curb their inflation. Inflation has been above their 2% target for a while now. But in her opening speech yesterday, doesn't really care.
Well, we'll see, won't we?
Inflation target, she says, under certain calculations of it,
right,
then yes, it's above target, but we're going to increase our fiscal spending. So basically catching up with the rest of the world. We had Germany, of course, taking the debt break off, and now we've got Japan going for expansionary policy as well. That means the carry trade is on and on in size.
Very much so. Look at that Nikkei go. Where's that? I've got it up in front of me. There we go. Let me get it on full screen. Hang on.
Yeah, let's see it in all its wonder.
Where's my? There we are. There's my Japan chart. There you go. Look at that, and then lift off. Lift off at the right hand side. There you go.
That's great. And Buffett, of course, seeing this 18 months ago.
Yes.
Buffett investing.
So when does the Nikkei cross 50,000? We're going for 50,000. This is a good poll. It should be Dow or Nikkei to 50,000.
No, well, okay.
Yeah.
What's the Dow at now?
47.
Okay, so yeah.
46,
Very
850. Good. So there you
go. Where does this leave us with the yen then, crossing over to 148 we were on Friday, 150 we are now. But are we going to see back up to 156, 160? Certainly the chances of strengthening down to 140 have been abated. Fill that one out.
No, put that one back again. Put it back again.
Yeah, so, and just a reminder, the carry trade, for those of you that kind of just starting in this thing, that's when you can borrow in Japan at a low interest rate. Now we think the chance of further interest rate increases have lessened. Therefore, it's more attractive to come and borrow at low rates in Japan now, move that money abroad, and invest in high-yielding assets. Now, the risk to that was that you would lose all the benefit. You'd lose it you'd lose it in the currency. Now, if the currency is also going in your direction, potentially up to 154, 156, then of course when you come to repay the loan, then you haven't actually lost anything there. So,
just reading up on with Goldman Sachs saying in the FT that she was likely to be even closer strategic alignment with the US and would create multi-decade tailwinds for sectors such as defense, shipbuilding, nuclear power, and cyber security. Very interesting. Very, very interesting there. Definitely one to watch.
Now, talking of Goldman Sachs, we've got a second treat for you this morning.
Oh, you are spoiling us.
So this is actually from our trading chat. We've got a WhatsApp trading chat, and the guys came up with this on Saturday. Gio came up with it. Thank you, Gio. This is from April the 12th, the year 2000. And it's when Goldman Sachs, all the big internet stocks had dropped 20%, and Goldman Sachs came out with a research note defending them, that it had been a turbulent first quarter and the coverage universe was down 20% year to date. But they still, despite this weakness, Goldman's maintained their overweight position on stocks that then fell as much as a further 60% in the coming months. But the interesting one was that the NASDAQ was only down 3%, while the internet stocks had dropped 22%. So, what that showed, that there was, they obviously weren't as big a part of the index, the Goldman Sachs Internet Index. as AI.
Even that sounds still like the early 2000s, doesn't it? The Internet Index.
Yeah, I mean, it is now the Goldman Sachs AI index, exactly the same thing. But yeah, sorry, screen back on, guys. Sorry, I was hesitating there. But you can see what was in it. Internet perennials such as AOL, Yahoo, and eBay.
Well, eBay still. There we go. I was actually looking at the top of the guy. Is it if you go to the top of the page?
Yeah.
Is it the guy? I think is his name, John Peter Curcio. I think what happened to him. I think he's now a financial advisor.
Right.
Atlanta. That was interesting because you got your name on that.
Yeah.
Note. It's
So, but this could easily be in 2 months' time. We saw substantial sector rotation in the first quarter. Many investors shifting their positions away from B2C e-tailers and content providers towards B2B companies, infrastructure companies, and a variety of international internet stocks. Just swap out the name Internet for AI, and you could have exactly the same thing. So there you go. The tide will come back in, or maybe you'll drown.
It did eventually.
It did, yeah, exactly.
Just maybe not in the ones you were holding. So there we go.
So that's my treats for you this morning. What have you got
exciting.
for us?
What have I got? Nothing as exciting. We should look at the front page of the FT for the fun story on the front of there that we talked about already, didn't we?
Go on, let's have a look at that. Now, when is there a problem? When does an alarm bell go? Usually it's on the front page of a magazine or a newspaper, and there is your headline.
It's a double whammy, isn't it? It's a double whammy. You've got gold, and you've got the magic word in there, or the magic phrase word. Not a word, is it? It's a term.
Yeah.
Acronym.
Acronym, yeah.
FOMO.
And a nice picture to boot as well.
So it's that thing about if you could normally, as we were saying this, you can't track this in real time. It's hard to sort of see these events actually happen. It's only obvious in hindsight if you sort of Google news search and see where the coverage, the excitement in an asset like gold or Bitcoin or stocks peaks, then it peaks quite close to at least a short-term peak, and then it bottoms out. This is quite almost literally seeing this in real time.
Blatant.
The last thing, I suppose, the closest one we've had since before this one, I suppose, would have been December, when it was US exceptionalism was on the front page almost every day, and then, well, it took a few months to come to fruition, but it certainly had a bit of a nasty moment, to say the least. But yes, after the huge run, of course, we've gone through. The last week I was on, was it last week? It went through 3,800. The week before it was 3,700, and now it's at 3,900. I think it's roughly the way it's gone.
Yeah. Parabolic, some people.
And of course, silver as well, I think, really. Where's silver this morning?
Silver doing the same thing?
I'm just trying to find it. 48.44.
So yeah, so our carry trade, bizarrely, because gold doesn't obviously pay an interest rate, so, or a coupon, or a dividend.
Barbarous relic.
Bitcoin's starting to go as well. Bitcoin through 124,000. So that's had a good weekend as well. But you can see US futures up 45 basis points, recovering a lot of what they lost on Friday. Friday we had a big reversal, and down it went the S&P 500 as well. But not FTSE. Our dear beloved FTSE. Right up there, 9,481.
Yeah, I mean, so the FTSE is at record highs, the US is at record highs, the DAX isn't at record highs. It's just off, well, about 300 points from record highs, and the Nikkei is at record highs. So it's a very broad-based global rally, isn't it? Really?
This is what I'm surprised that money's not coming out of the US and into other things. I'm surprised the US is still going up at the same rate as the others, because when you've got opportunities like Japan, then
yes, but then you've got, I suppose it's the liquidity is going to be in the US. It's where it's going to go first. There's that sort of, I don't know, home country bias you get a bit with people preferring to stick with US stocks. It's made sense, hasn't it, really?
Or the futures have just been marked up and they fall away later. Because that's, Friday was a clear reversal there. That was Friday from about 5 p.m. It tried to get to new highs, 6,750. It had a look at 6,750. It put its head above the parapet and was shot down by as much as 45 points.
But then it just shrugs it off and off we go again.
Well, that's what I'm saying. So is this just a markup this morning?
Yeah.
That we see retraced later, exactly like we did on Friday, because now we're on to Tara. Tina is no more.
What's this one now?
Well, it's when you dump Tina and start dating Tara. So there are real alternatives.
Right.
Tina being
there is no alternative. Yes, Mrs. Thatcher would say yes.
So yeah, the real alternatives now to the US, of course, are FTSE going through all-time highs. The DAX is coming back to the party, and now you've got the Nikkei as well. In this week's Art of Investing, we are actually looking at emerging markets. Are emerging markets showing opportunities here? We're going to be looking at India in depth. This is the one that we've still yet to record. We record that on Thursday to be released on Friday. The Friday just gone, we did our quarterly review. So if you want to find out what we think of all our positions, including the Nikkei, we've got 10% in Japan.
Very good.
Then have a look at the Art of Investing podcast. That is out on all good podcast providers now.
Just looking at the emerging market ETF, an absolute storm. There you go. Very good.
Yeah, that's why I'm surprised. People are still buying the same.
Not too far
names.
What year is that? What's that? 2021 highs. Wowzers. Gosh. Let's look at that bounce. That's mad. Sorry.
Where would you still see value?
Value is the hardest thing to find at the moment, isn't it, really? Arguably, even now, the FTSE must be, 15 times earnings? Must have gone...
a whole 15 times earnings.
Yeah, exactly. A little bit more expensive. Japan's still reasonable, I think, has always been another one of those less expensive markets, hasn't it? Off the top of my head. I'd have to check the terminal to see what that says.
Yeah, bring the FTSE up, Tom. Thank you very much. So there's the FTSE. It's taken a long time to gather the pace to get up there, but it certainly broke out last week, didn't it? With that help by AstraZeneca.
Yes, the farmers really gave it a pharmaceuticals, not actual farmers, gave it a real boost last week, and the AstraZeneca news very much in the news. Wasn't that much going on really, but it was notable how strong it was. But is it? I don't want to relitigate this argument that I'm going to. It's because if you look at the US and if you grade the indices, we did this a while back, you look at the indices on profit margins, where are the widest profit margins, it's almost always in the US. And it's just a case of saying, where are they making the most dosh? In the US. And that's why the natural home, and it's 70% of the global stock market anyway. And that's why I still think it's... You've seen it reinvigorated. Yeah, but this is why I think it's not to say to echo Goldman Sachs from 25 years ago that it can't possibly go down and it's you buy every dip. But I think it's that people are always willing to pay that premium if you are then getting the profitability that goes with it.
Yes.
You're not getting, of course, the dividend to the same extent because the FTSE's dividend is still above the S&P, so you're not getting paid as much to hold it. But when the capital growth is like this, then you are being compensated clearly in many other ways.
So that takes us to Financial Times. America is now one big bet on AI. That's it. That is what you're pricing in to 40% of the index. 40% of your investment is in AI. And as we saw Goldman's, that's exactly what they thought about the internet back in 2000, which the internet continued to do incredible things and is now, of course, part of our daily lives as it was then. But AI can do exactly the same thing. It can be part of our daily lives, can't it? But it doesn't necessarily mean that the current...
you have to remember that the two things can still be true. That this may be getting a bit silly, that I hesitate always to use the word bubble, but I think that the frenzy, shall we say, is going in that direction. And the fact that NVIDIA is paying OpenAI to buy its chips, that's a bit too circular. And then I think, there was a line I saw on Friday. I need to check the veracity of this quote, but it was something like someone has managed to set up a company with sort of two guys, and they've raised hundreds of millions of dollars from investors, and nobody could really tell. They couldn't really tell anybody what they're doing. And it's that echo, that famous, or the infamous line from the South Sea bubble, the company that gets set up, a company to do so-and-so, but nobody to know what it is. And it's that, people are literally just throwing money. If you come and walk into investor pitch meeting and say, I've got an idea about AI, I can't tell you what it is. They go, here's some money. It gets a bit silly.
And then, of course, people always look for the next thing, right? And the next thing is of course, quantum.
Yes.
So I shorted one of the quantum stocks on Friday. And just a small little go. Look at this thing. So this is Rigetti, and these things are now have a market cap of 20 billion, right? And it's a project, you know. It's a experiment, and it's worth 24 billion.
This is the kind of thing that comes back to earth very, very quickly, doesn't it?
That's it. So I don't know how brave I want to be in this, right? I've already lost like $200, but I had some Plug Power on Friday.
Oh yeah.
And thanks to our good friend Piers, I think Boise might have had some there as well. But Plug Power up, I think it was 35% on Friday alone. So I had some money to play with, so I decided to invest that in being short some of the quantum, well, one of the quantum names. But yeah, 42%, sorry. Plug Power up 42%. Well done, Piers Buckworth. Sometimes, you know, I like to take the mick out of him.
Yeah, but sometimes.
But he's absolutely nailed this one. Plug Power upgraded by a company I'd never heard of, to be honest.
No.
To a $7 target. And so they were up 42%.
Blimey.
Short squeeze. We are in motion.
I found the story. Thinking Machines, an AI startup run by a former OpenAI executive, raised the largest seed round in history, $2 billion in funding at $10 billion valuation.
Show off, guys.
The company has not released a product and has refused to tell investors what they're even trying to build.
Has refused to say what they're trying to build?
What they're trying to build.
Wow.
We're doing an AI company with the best AI people, but we can't answer any questions.
Okay. I'm in.
Where do I invest? Where do I sign up? Why is it not on the platform yet? Come on.
Right. Are we getting a comment there? Neil Brewster. This can't be true, can it? They have. They've done a placing. Smarter Web Company are back with their first placing in, this must be about 2.5 months. 9 million shares at £1 each, so obviously 9 million. 8 million of the placing was subscribed for by a single new US institutional investor. Wow. Well, this is... the company has also issued one warrant for each new... Ooh, what's this? One warrant for each new share. Each warrant is valid for 36 months and exercisable at £1.50. Which represents a 50% premium to the issue price. Right, so we're putting on warrants to make the share more attractive. The company may demand the investors exercise the warrants in the event that the share price trades 200% above. Go, there's certainly, that's another funky, not sure.
I know the FT were talking about it last week, weren't they? These Bitcoin treasury companies and how they've pivoted to actually issuing their own stock or buybacks to keep things.
Well, yeah, that was the ones that were loss making. Yeah. So that's the ones that are a little bit more, or let's say less sound management, perhaps. This of course, Smarter Web hasn't done that. It might want to, but we've also got a subscription agreement. So that is 12.3 million of new funds. So that's interesting. We're going to watch that one on the open. I would imagine that one has a decent rally there. And that takes us nicely into our break. So, you excited for the open?
I'm very excited for the open.
What are you going to be watching?
Ooh, there's no RNSs. Aston Martin. We should talk about them. Mentioned in the chat already this morning. Downgraded expectations.
Oof. Oh,
again.
A warning from Aston Martin.
It must be a Monday.
We'll see you in 2 minutes for the opening with the London Stock Exchange. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, welcome back. Yes, we are almost at the open. Now, as I said, I'm going to be off tomorrow going on the back of the Avro Lancaster up there in Lincoln. But on Wednesday, we're going to have a camera from the London Stock Exchange in here to film us doing the opening bell. So today's poll is, should we use our new bell or should we use our old bell?
The bigger.
Because this is beautiful, but it's a little bit smaller.
A little bit small.
Do we want a proper...
You want a proper sort of...
Yeah. So we are, as we say, we got a camera in here from London Stock Exchange for their social media. They're going to have put us out there on social media. But I don't know which bell to use.
The biggest one, surely. Surely one. The biggest one you can find. But you don't
Talking about the biggest one you can find, what about Aston Martin engines? Why are they not selling, Chris Beecham?
I don't know. Can you see this? This is Jeremy Hunt from about 20 years ago. Watch happens.
That's what we
He
need.
killed somebody by throwing it so hard. Watch, and he flies off.
Get us Jeremy Hunt's bell.
He nearly killed somebody.
David Boyce saying
Sorry.
new bell.
New bell. Oh, it's a bit small though. Elegant.
Oh no, I've opened the exchange early.
Yeah.
Here we go. Give
Thanks
that a
very
proper
much.
ring. Pretend that
Okay.
they're watching you, Chris. Pretend that you're going to be going out to millions of people
Millions.
You got 5 seconds until.
There you go.
And that's it. The stocks of the London Stock Exchange are off and running for a Monday morning. Just on Monday, guys, you're going to have to, don't put the screen up until the stocks are open, right? That's going to be important because we can't embarrass ourselves by having no prices on the screen, no live prices.
No, you wouldn't want that.
So, yeah, because remember, the stocks open with up to a 30-second delay. But not this morning. This morning we're looking more like 10 seconds. We're up there with Rank Group up 3%. Fresnillo up 2. Silver, Hio Silver up and away. ITV small up there. Aberdeen.
You can't. Oh, they need to change that because, of course, they are Aberdeen again. So
We ask them to change things every day and it never happens.
Okay.
BP up 1%. 428.
BP and Shell do all right this morning.
Yeah. Of course, we did have news from OPEC over the weekend as well. So we see the effect on the oil price in a minute when we look at commodities. What about the losers today, Chris Beecham?
On the downside, poor old train line delayed once again. And farmers taking a bit of an easing back, 1.4% down for GSK. Burberry, Pearson, EasyJet. The mining stock, the BHP coming through there as well. And Unilever. EasyJet off by 1%. Why is that? Oh, oil prices? No.
Well, that's a great segue you've given us. Let's go to commodities and see what is happening with oil.
This is because the output hike was smaller than expected is the word I'm looking for, not less bigger than expected. There you go. This is my wordsmith for you. So I get paid to write words sometimes. Yes, not as big an output hike as expected, which is the thing that really clobbered oil prices last week. OPEC seems to be very much on the, we're going to pump this stuff, and if that screws over the shale gas guys in the US, we don't care.
Nope.
So this is what they're going for. And of course, it lowers the gas price, which makes you popular with the man in the White House. Absolutely
it does, and that's the only thing that matters after all. But silver, all you that are invested in silver, you will be happy there, 1.3% up as well. You got natural gas, very strong this morning. And then, the others, copper just giving some back actually. Copper.
So silver, 2 years ago, was at $20.70. So it's now more than doubled in
120% increase.
Very nice. Very choppy journey along the way, but it's certainly gone parabolic the last 6 months.
Right, those currencies, 134.40 is how many dollars you'll be able to buy with your beautiful British pound. And then, dollar yen right on the 150 level. Where does it go next, Chris? Is it 155 or 145?
Probably 155.
Yeah, that would be the expectation.
Seems a little rocket under it. If it gets Japanese economy moving, no bad thing, I suppose, but going to be tough with the bond market.
And then the indices. We still got the US markets looking up between 30 and 40 basis points. Hong Kong had a weak day. Hong Kong was down 60 bips. And Europe also weak. Why is Europe weak?
Well,
I guess it didn't. Of course, it was closed when the US sold off on Friday.
Yeah. As we were saying in the break, there are some new cabinet unveiled in France and not very popular at the moment. So what else is new, of course? I don't know how many governments they've been on since over the last year.
Chart off, guys.
Must be about 4 or 5 different governments.
Yeah.
Since the last one fell to a vote of no confidence.
Guys, chart off.
So a little bit of a weaker performance there in France this morning.
Right, now you mentioned Aston Martin. What is happening there?
It's not opened yet, but the RNS, what did it say?
Wholesale volumes to decline mid to high single digits. Was it expected? Did we think?
What, bad performance from Aston Martin?
No, a trading update, or was this?
I don't think it was on my list.
Right.
I think, but then
adjusted EBIT to be lower end of range of market consensus.
Yeah.
Profitability and free cash flow expected to improve next year. Of course it is.
Tomorrow.
An immediate review of future costs and capital expenditures has been initiated by the management team. How many cost cutting can you go through? Really sad though. It's like one of the best UK companies, and just some things just shouldn't be on the stock market.
No, it's open now. Okay, what is it? Hang on.
And it is down 7%.
7.5. Oh, well, that's not
So
a mere bagatelle compared
we're a nice DB7 for us there, down on the day. How far do we dare go back? Look at that.
Yeah, well, since that 2023 rally that saw it quadruple in price, so well done if you did catch the bounce, and then it got absolutely slammed once again. The reminder, of course, that stuff can go down 90% and then go down another 90%. The brutal reality of percentages in the stock market.
Yeah. Was there talk of this being taken private?
You'd thought somebody should put out its misery, but
yeah. Right, so there is Ask Martin. Let's see if Smarter Web, that has, well, it's a widespread there, so £1 to £1.15, not going to help anybody, but it does look like there has been a buyer at 1.15 because it's been marked up 9p there. So let's see how Smarter Web gets on during the day. Defence Holdings clobbered on Friday. You can see it drop back there from that 450. Yeah, little bit of a bounce there. And
what does that do? What's Defence Holdings do? I've not followed it.
So they are, of course, AI. But
why are they not called AI Defence Holdings? We'd be all over it, surely.
Yeah, they need to spell it differently, don't they? But yeah, they are connected with the UK government.
Okay.
And in the, obviously, defence part, unfortunately, they can't disclose what the contract is because it's behind the Official Secrets Act.
Yeah, that's convenient.
So it's really interesting, but they're some are talking about it as if it's the UK's version of Palantir.
Right. Okay.
But very small at this moment. But it does have some incredible management. The ex, generals from the military and such like.
Right.
So, what else have we looked at? We've looked at Pinsana. Oh, Pinsana new highs there. That's an interesting one. So 145. Still got a little bit of those in my SIP. And benefiting there, of course, from talk in the US around this this chance of rare earths,
yes,
being so important to the government there, that they may invest in it.
There was one FTSE 100 RNS this morning, Mondi, which is down 13% now after a clearly badly received update. Sustainable packaging and paper, but not.
Come on, guys, start off. We're not talking about it anymore.
So there we go. There's your shocker of the morning.
The shocker of the morning.
Well, yeah, because it was nasty reversal on the share price.
Right, what have we got to look forward to this week then? What's coming up in your week ahead?
It's a bit of a snooze fest this week, of course,
is it?
because we had non-farms payroll day, didn't we? Which is great. I think every non-farms payroll day should not have the payrolls day release because it's much calmer. It's less stressful, really. It's much.
I really missed that on Friday.
So nothing happened, and still a government shutdown. But you do have this week Michigan confidence on Friday.
Let's have a look at that week ahead that Beachy spends all his Sunday writing.
Yeah, if I wish. So as you can see, empty start on Monday. Tuesday, I think we get... What do we get? Go to the weekly view because we can get the weekly view in. If you click on the weekly view.
Go
up.
Where do you do? How do you do that then? The
Where it says weekly view on the end of under the economic reports. See where it says Monday? There.
Got it. Beautiful.
There you go. IVPMI Tuesday, but I suppose the other big thing to watch Thursday 1:30. Powell to speak. I don't know what the subject is. I'm going to find out now for you.
At 1:30. Where does he talk at 1:30?
He is, according to this, opening remarks in a pre-recorded video at the Community Bank Conference in Washington.
Right, okay.
Yeah, so there we go. Not the busiest week on that front. But then, of course, it is the beginning of earnings season because Delta Airlines apparently is the new stock that kicks off earnings season now.
Ah, right.
So they go on Thursday.
Okay. Oh, right. So although it's not really the start of earnings season, I think, because we've got
the banks
Delta
the following week.
Yeah.
Yeah.
Okay. Thank goodness. One more week to go. But we do have trading updates from Imperial Brands and Shell tomorrow. And yeah, Shell, of course, important to the
Yes, very important. So that's good. And then BlackRock as well. So it will be earnings season will be underway, but I suppose it really just kicks off with the banks the following week.
And then some nice dividends just to remember why stocks have moved on Thursday. Kingfisher will be down, Tesco's will be down, and WPP and some of the fizz will be taken out of AG Bar in the FTSE 250.
There we go.
Right, on that, we'll go to a break. Coming up, remember, I've got Elliot Harris here in about 16 minutes' time, but Angeline coming in to grill Beachy on some fast markets.
Chart starting one of a kind. Footsie's moving, candles climb and fall. Axel's trade of the week is the talk of it all. Rich is trading, clicks all through the day. Angel's watching, she's got something to say. Shell and BT, Tesco in the frame. Name that chart, that's the game. We're on Trade Live with IG, guessing away. Please remember, folks, not financial advice today. While this song plays, they're working it out. Charts on screen. What's it all about? Cam's on the camera, Terrence calls the cue. Dom's in the booth, keeping sound on you. Dr. Watson's watching, Johnny's rolls the feed. Ainge drops the facts, just the thing you need. Rich is quick to jump on a swing. Ainge digs deep, asking the real thing. Producer Phil says it's your call. And guess the chart, we want it all. We're on Trade Live with IG, guessing away. Please remember, folks, not financial advice today. While this song plays, they're working it out. Charts on screen, what's it all about? One chart's rising, the other might fall. Footsie's dancing, it's showing it all. Click that mouse, take your shot. Guess the chart, give it all you've got. We're on Trade Live with IG, guessing away. Please remember, folks, not financial advice today. While this song plays, they're working it out. Charts on screen, what's it all about?
Hey, welcome back to the show. Did you guess the chart? Did you?
It brewed up nicely.
Did it? Oh, don't give it
Been there,
away.
done that, really.
No, it was Starbucks indeed. For those of you, I wouldn't call it real coffee though.
No, a lot of people really don't like it, do they? I've been to the original one. Have you been to the original one? First one?
Yes,
Seattle? Yeah.
yes, yeah. I think they lost their way a bit. I'm really, if I had to choose, I'm more a Costa person. If I had to, forced to choose
They're all-
on the
it's all
high
just
street, they're all a
either.
bit of a muchness.
Just get
Yeah,
this out of the
who
coffee
got it first? Was it Jugger? Jugger and Chris Beecham, a tie between
What do I win? What do I win?
Well, you either get a hat or you can get,
Apparently I cheat because that's the way I work out what it is. But
maybe you get a new bell.
I get a new bell. I'm not buying a new bell.
Right. Speaking of bell, let's get on to fast markets. Let's see what's moving out there. French banks are the ones that are moving at the moment. Let's have a look at Société Générale
Now,
there.
they've had a really good run, haven't they, actually,
Yes.
of the time. If you're in the CAC, the banks have been absolutely storming it. In fact, they think, and this requires a bit of data mining or cherry picking of data rather, that they have outperformed some of the Mag 7 over the last sort of, if you say the last 4 years, 6 months and 2 days or something. I think was the FT's point there. Over a certain time period, they have actually outperformed the Mag 7, but absolutely stonking performance from SocGen.
Yeah.
There, really.
Amazing. And also, let's have a look at BNP as well, whilst we're at
Firmly
it.
in the uptrend category,
Yeah.
so you wouldn't want to short it.
No.
No price, but
there we are.
not quite so stellar BNP. A bit more up and uppy down, really, but a bumpier ride certainly. Which of course is the problem, that sometimes you get an uptrend that just goes and goes, which is great, and other times you get an uptrend that just frustrates you
Yeah.
because it does get there eventually, but it takes an awful lot. It's a very messy journey. I think this is the thing about investing that. Sorry, this is on fast markets, but sometimes it's not about where you start your investment, where you end. It's the journey in the middle, and are you capable of? You're telling me to hurry up.
No. I'm saying it's good because you. This is the wonderful thing here with Chris Beecham, because he has done the setup beautifully. So done really well. Completely agree. However, not today because of this man. You're doing the drum roll for me. Da da da. The drum roll. So not doing very well today, but doing well overall, but not so much today because. They're falling because Macron has named this man the new finance minister. It's becoming a bit of a thing over in France. If you want to be in, the top notch amongst the ruling class, there you have to have a surname that starts with Le Beecham. Le. So it is Roland Lescure. I hope I'm saying that right.
Don't ask me.
Lescure, handsome man. This I'm saying with.
Look at him.
Macron ally named finance minister, a nomination that is seen by many as a nod to the left, and his first challenge will be to negotiate a budget for 2026.
I was just looking
with that.
at the run of finance ministers. So Bruno Le Maire lasted for 7 years, and then they've had 3 since September 2024.
It's like changing socks, isn't it?
Yes,
Yeah.
or buses.
Or buses.
Of course, notably Christine Lagarde was once French finance minister. So there you go.
Yes. I remember bringing in a mug with myself and Michel Barnier, and the then producer Fred going, it's going to last just a few months.
Yeah. Yes, because they are going through prime ministers' cabinets at a rate of knots. I don't know what the French is for at a rate of knots. I haven't got that far in Duolingo yet. But
So the other fast market item that I'd like to check, get out of my dreams. You know that one? And into my... Chris is
straight
not...
over my head.
Let's take a look at cars, people. Stellantis is up 2.5% there. Have you covered Stellantis already? Because that is moving quite rapidly. This is after a media report of a planned investment of $10 billion in the United States. Does this mean that Trump's method is working?
Yep.
Its shares are tracking higher. When they opened, Andrew McKilvey and I watching the open there. What's happening with GGP? Andrew, do update us. But Stellantis at the open was up just 2. Now it's up 2.7%. We're having also a huge number of car makers coming out in the last hour or so saying that they're planning cost cuts. As we've said time and time again, Chris talked about this a lot. Cars still feeling the pain here and still the one time again we see clients shorting this sector.
Yep.
It seems like, do you see any end in sight yet?
No, you don't see much sign of a turnaround, do you? Really, it continues to be a major problem. And if China continues to expand into Europe, that will put even more pressure on them. So it's a very, very tough outlook.
As we've seen with the sea lions, the seagulls,
Yes.
the...
Oddly named cars.
Yes, someone tell me why it sounds like a menagerie of sea animals. I'd like to know. I have been in every one of them, and I have to say in the last 3 years even, the leaps and bounds in the build quality is nothing short of
Impressive.
spectacular.
Poor old Renault clawing its way higher since August, and now look at it. Is reality about to break out once again for them?
Yeah. Totally. And let's have a look as well at Volkswagen, because Volkswagen also holding on a bit, but it is, pretty much flat. The Volkswagen said April 30th that they were going to cut headcount in Germany by around 7,000. And Renault saying it's going to, also going to continue. What is the new term now? There's a new term, isn't there, Chris? New term. It's not cost cutting anymore. It's right sizing.
Right sizing, one of those invidious terms that people come up with.
Yes. Let's bring up the chat because we've got quite a few things coming through here. Please check semiconductors ETF stocks. Thank you, Jugger. We'll have a look at that. Bigger fears. Love it. Your music knowledge never fails to impress me. Billy Ocean, indeed. Let's. No one in the gallery.
Good, somebody did, because nobody else.
Oh,
got it
thank
around
God. Yes. If I sang, something like Zadok the Priest, then you would definitely get it. Yeah.
here. Early in the morning for Handel.
See? Here we are having a look at that. And it has been moving like all the other tech stocks.
New record high. There we go, storming through the high set in July of last year. Very much frustrating one, this one, because you've had sort of false dawns, the dip, and then it dipped again, and then it's dipped again, and then only since April has it really turned around, hasn't it? And had a very grim start to the year. It was very lagging the broader market, even in January, and then knocked back sharply. But a very impressive performance since then. What's up? 80% or so, more than that?
91%.
91%.
That is using the very rough measure tool that you can find on your IG platform there. But yes, nevertheless, more than 90% there. Checking on some others too. We've got, let's have a look. This is slightly less known. Have you heard of Advantest? Automatic test equipment. And just have a quick look at that because that is moving more than 3% higher. It's very, very illiquid there, but they produce automatic test equipment and are related to smartphones, computers, and automotive electronics. Fortis Healthcare is another one that is moving quite rapidly. Let's see. We don't have Fortis on my chart. Do you have Fortis?
Fortis.
Healthcare.
I can try.
Let's have a look there. Whilst you're doing that, just looking across on to my list there, Fresnillo is up 1.6% there. Many of the miners having a good day. No surprise there given what we're seeing so far. But I did note that FT article as well.
Yes, we're enjoying the front page moment.
Do we have a rough estimate of how long before, when it appears on the FT, how long before things might start going pear-shaped?
Southwards. No, we don't. Is it Forbes, isn't it? There's always the one that people, or the Economist front cover. When something appears on the front cover of the Economist, the trend is over, either up or down. So that's always a bit of a
interesting.
tell. So
Did they say
far.
anything about silver on the FT? Please say no.
No, I don't think they didn't. No. But then, of course, if gold goes a bit, and it's again, to put my analyst hat on and say it's probably due some short-term weakness, which is another way of saying it's gone up a lot and therefore might struggle to go a bit higher in the short term for reasons that would reveal themselves in due course.
Pensana also moving up 4% there. Pensana is a really popular one here with our clients, and look, it's still very, very well above the EMAs that I've drawn out there for you. Andrew McIlvey, thank you so much for pointing that up. Greatland, it had a slow start. It had a good start, then it had a really slow start. I was out there watching 802 as you were talking with Rich. Let's have a look at GGP. And it's now up more than 2% there. So taking a look at the minute to show you what I was talking about, you can see it took a while, but now it's up 2% there. Hemo, let's have a look at Hemo as well. This is one I'm not au fait with.
Nope.
Up 9.5%, 9.3 now.
More earlier this morning, but there we go.
Tell us more. I'm not
Never heard of it.
Yes, Homogenics. I love how we learn about new stocks
Blood
here.
diseases and viral infections.
Huh. Where is it based even?
In the UK.
Huh. Clinical stage biopharma company focused on discovering, developing, and commercializing therapies for blood disorders like leukemia. Interesting. Right. Must pick my primary school pal's brains on this. She is top-notch professor in oncology, pediatrics in this country. And she used to sit in front of me in school. Clearly, I wasn't listening.
No.
Monkey Man, good morning. There's a rumor Tesla has an announcement coming up on Tuesday. You've heard anything?
No, not at all. But there we go. Because Tesla's up 1.4 in early trading this morning.
Monkey Man, where are you hearing this from? Because I'm just checking my filters to see if there's any big announcement in the next few days. But let us know where you're getting this information from, because I like to cross-check it. Always like to
Come off that 1 minute chart and go to a
yeah.
longer term chart and get a sense of
It has been squeezing higher. I mean, everyone I know with Tesla stock, very happy indeed. All happy bunnies.
Well, the further away you get from government, the better the stock is likely to do. Let's put it that way.
It seems like Elon Musk not saying anything is a very good thing for the stock.
Yes.
Just be quiet. Just don't say anything. Don't say anything at all. They have indeed done quite a few things of late, especially in amongst the Teslarati in Asia. So everyone there, I'm heading to Asia soon, so everyone there that I'm speaking to have said that there's great excitement that many of the models are going to be apparently revamped because they've been unloved recently. They're going to apparently, I've heard on the grapevine, launch a more affordable Model Y, which has apparently had great response in Asia, where they want bigger cars because they still have big families. Unlike in the Western Hemisphere.
Yes, where nobody has any families anymore.
Yes,
The
it's now.
trend goes on.
It's now. Kids are now a luxury item, I've been told.
Right. They were anyway, I think.
Yes, and lots of talk about a new Tesla Roadster. You can tell between the both of us who's really into their cars.
Whoop-de-doo. It's got 4 wheels, it's a car. They're all the same, really.
Monkey Man saying, oh, Twitter, nothing official. Just having a look at the stock here, though, changing it over to the weekly and the monthly. I know Rich Tea Biscuit often says this, and also Piers. It's not about the cars. Many who are, cult fanatics, really into Tesla, it's all about what this company will become after EVs. So your space logistics, your drone logistics, and security. So I don't know whether you agree with that or disagree.
I think it makes sense.
Right, so how much time we've got? I'm just going to look at my filters to see what else is popping up. Anything scream out at you?
No huge news so far this morning. Coinbase up 2.1%, although today's only trending as well, so that's a solid start for them.
Yeah, let's have a look at my chart here. It's popped over to the side.
Monkey Man's correct. A car is a box on wheels.
It is a box on wheels, unless it is.
Gets you from A to B
Yeah, but with Tesla stock, it's completely different because a lot of people betting on the other things that the company is developing. Let's have a look across to Germany. We've got Hanover Re, Munich Re on the gainers list. BMW as well, revving higher, more than 1% there, and Porsche. And looking at the losers list, any of those pop out to you?
Well, on what news? I don't know. Bayer certainly have another tough morning. Adidas down 0.4%. Not much though.
Yeah. Also, a quick look across to France before we go. Here we are, looking at the losers first. Thales down 2.6%. And as I mentioned earlier, the banks there, due to the announcement that France has got a Macron ally as the new Finmin there. So looking overall like a flattish to cautiously higher day. Right, for more, do stay with us because we're going to get Elliot in here to talk about volatility, to see whether the squeeze up, as he indicated last week, is still in play. Give us a like and subscribe, and also hit the thumbs up button. And any questions to Chris, do send it to me on ask@ig.com, and I will get it in front of him. Thank you so much, Chris.
Pleasure.
All right, stay there. Elliot's up next.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. We have Elliot Harris with us to, well, I'm going to grill him today because he thinks he's doing well in our bet. A reminder, The bet is that the S&P 500 will reach 7,000 before it reaches 6,000.
Give me a few more reads. Yep, I'm there.
We're getting
there.
closer. You've got a halftime lead. I'll give you that.
I'm about 4-0 up at half time, I think. Yeah.
Right. What do you think of this Japanese move over the weekend?
Yeah, this was a little bit of a surprise, really. I'll have a go at the pronunciation. Takachai. I might be. Near enough.
Although CNBC went with Takeshi.
Okay. Wow,
Okay, come on.
Very American. The market's taken this to be that she's going to be pro-stimulus and bring a dovish policy stance. So equities higher, JPY depreciation. We're going to see higher bond yields. But it came as something of a surprise, which globally, it's been a while since we've had a surprise, I guess. So,
yeah, 2016, a couple of them.
Yeah, exactly. So all very strong. What I think Nikkei's up almost 4-5% maybe.
Yeah, 4.9%. So those of you that are interested in rates and what's going to happen in Japan and rates, now it is less likely at the end of October because she doesn't actually go into office on October the 15th. So it's unlikely Bank of Japan will raise rates at the end of October. In November, there's no meeting. So that means that it will be December before we get a rate increase.
Yep.
And that's why you're seeing such a fall in the yen.
Yep.
Does this mean that the carry trade's back on and everybody's bundling into risk assets? I mean, we see, the NASDAQ up 35 basis points for no reason. We see gold up 1.2% because I guess this now feeds into the West's idea that debt levels don't matter.
Yeah, there's been a small change in the skew on the longer term dollar yen options, euro yen. We seem to be interested in that. It's not been aggressive though, the shift in the skew. So I wouldn't go as far as saying the carry trade's back. Certainly a step closer towards that though, most certainly.
Yeah.
There has been a change in the structure of the model, let's say that, but it's not been overly pronounced.
Your risk, I guess, is a lot lower because I don't think we can see the yen at 130 now, for example. That'd be really...
Yeah. For me, and we've had clients that have been kind of taking this view for a good 6 to 12 months now, the risk is to the top side.
Yeah.
We see a lot of interest in the 170 calls and up. Seen a bit more of that this morning as well, actually. So there are people, that are thinking along those lines, but the model hasn't quite shifted aggressively on that.
Yeah. It's quite nice to have a story like that over the weekend that's not involving the orange buffoon. It's almost, it's like, well, maybe he's not getting paid in the shutdown, so he has a weekend off.
I'm sure he's all right. Yeah.
So but the shutdown market doesn't care.
The market does not care at all. Over the weekend, you saw saying a blame game. Yeah, Republicans, Democrats, all blaming each other. Market isn't particularly fussed, really. I'll come on though to a couple of bits of Bob's a bit later, but House Speaker Johnson has cancelled all votes scheduled this week. So I really don't think there's going to be much coming out of the States for a good week or so, I think, still.
Yeah, I wonder if that is part of, can the votes come back in, or we literally don't have any votes this week? I wonder.
I took it as I took it as the latter, that there are no votes.
It's absolutely staggering, the market.
Crazy. Yeah. Like, how can it happen?
But it's not quite as relaxed as it seems, isn't it? If you just look at vol for the index, it looks fairly relaxed, but not under the surface.
No. And if the guys can bring up the chart that I sent you, please.
Oh, you've got a chart for us.
This is a lovely chart. Right. This is showing a chart between the VIX and the VIX EQ. So this is, we all know what the VIX is, obviously, over indices based on S&P option prices. But the VIX EQ, that's for single US stocks, okay? So what we've seen is Now, I came on last week with Ange, showed a lovely screen which had difference between implied vol and realised vol. Now, implied vol is pretty much on the floor. We're pretty much as low as we've been, certainly within the last 12 to 18 months. Now, slightly different, actually, in terms of the fixed EQ. So single stocks,
which is the white one on the chart,
exactly,
just for everybody at home. Yeah.
So you can see over the last, say, probably 2 or 3 weeks, VIX has been relatively stable, so had a 16 handle. This fixed EQ's ticked up maybe 5, 6, maybe even 7 points possibly over the last 2 or 3 weeks. So the gap now between the two is over 22%. Now, year to date, that's at a high, but if you go further back, that is actually getting on for, we've had a couple of instances where it's been slightly wider. Yeah, so the headline VIX is trading at a discount of over 22 versus this VIX EQ. So what's it telling us is, okay, index vol remains on the floor. Realised vol especially is incredibly low. I think I saw S&P realised vol around 6%. Not really going to get much lower than that. Nasdaq is only 7 or 8. Well, if you think that Nasdaq IV is 17 or 18%,
yeah,
that's an almighty diff.
Yeah.
This fixed EQ though is telling us that there's still plenty of action going through on the single names. A big part of that is it's mainly driven by the mega cap, so your Teslas, your Amazons, your Metas. So plenty of action still on the single names, which for someone who prices daily options and is the only one brave enough to do so on the Mag 7 stocks, makes it tricky for us. So
yeah, that's really tricky.
Seeing plenty of action on those. Yep. So a lovely way to trade those bigger names. Have a look at our daily options.
And does it mean the rotation, not necessarily rotation between sectors, you know, like coming out of tech into pharma, right? That kind of happens often. Is this something different? This is actually saying within the tech sector, you're getting Amazon down 2 and you're getting Google up 2 and you're getting Nvidia up 1 and Palantir down 7. You know, is that?
Yeah, you are getting divergence between sectors, to be honest. Last week, I think you had, one second, let me just check my notes. You had a deal between Nvidia and OpenAI, that sort of tech up, say, just under 3%. You had healthcare up nearly 7% on the back of the White House and Pfizer deal. So you are seeing some divergence between sectors as opposed to actually within a sector. US markets are basically, they've hit almost a little bit of a crossroads. So they're basically.
Hang on, are you trying to get out your bet here?
No. I'm.
What crossroads are you on?
7,000 camp. Massively in the 7,000 camp. Don't worry about that. The equity market is still remaining focused on tech spending. Okay, so that's obsessed. That's very much driving a large part of this, certainly tech-led rally, if you like. US markets are assuming that the dollar can handle pressure from any macro weakness out there. So the only, you've got quite a lot of, that's a word I can never really pronounce, idiosyncratic.
Idiosyncratic, yeah.
Moves.
You're pulling them out this morning.
Absolutely. The only real resolution of that is going to be non-farms. Now, is it that, and this is the key question for me regarding the States, is it that are the US companies forced to lay off workers to cover those extra tariff costs which they may not have priced in 6 to 12 months ago? Or is the economy going to be re-accelerating? I think it's more of the latter, and I think Q1 next year, we're going to see it go even further.
But you don't need people anymore. You only need machines. You only need to plug in your AI, and that's where you get the growth and productivity from.
We're not there yet, are we? Obviously, but we're certainly going down those routes. Yeah.
So I don't think you would hire anybody because you know how close you are to, having that big uplift in your productivity.
Yeah, I don't think we're there yet with AI. Absolutely, yes. I'd be a fool to sit here and say that it isn't a danger to jobs. Of course not. I don't think we're quite there yet, where it's
So you
taking
need,
over.
yeah, you need another few heads in the meantime.
Yep.
I wonder.
Yeah, so that makes the non-farms the key figure.
Yeah.
There are other data sets out there which may give us maybe a slightly clearer picture, if you like. But when are we going to get that? Nobody knows when that key piece of information is really coming out.
And that, of course, the only reason that we care about that is because we care about interest rates, because
Absolutely,
the market now pricing in all these cuts.
Yep.
Jerome Powell speaks tomorrow. I doubt that we're going to hear anything new,
I agree.
because if we aren't getting new data and he's data dependent, then his hands are just tied, aren't they?
Completely. Yep.
Shall we have a little look at the expectations? Let me see. What's the page where we get the probabilities? Fed Watch, isn't it?
Yep. The old dot plot.
Yeah. Let's see what is now being priced in. We've got 23 days till the next Fed meeting.
They come around quick, don't they?
They do. So I can't believe earnings season starts with Delta this week. But
And that's been part of the driver of VIX EQ ticking up so aggressively. We're now very much coming into earnings season.
yeah.
I can see that continuing. So for me, I can't see index vol changing too much. Equity vol, I can see the spike continuing, if you like.
So we are definitely getting a cut in
Almost
October.
certainly, yep.
And then December, there's an 84% chance of another cut.
Exactly. So if you go to what you can do, the aggregated or the probabilities, but they're pretty much, okay, they're not quite pricing in 0.5%, but you're probably talking somewhere in the high 40s
Yeah.
on that, yeah.
Wow. Okay. Now, the assumption being that rate cuts are good.
Yep.
Can we assume that? Because rate increases weren't bad. So are we still there, or is, I think it's now 50% of consumer spending comes from 10% of the population.
Yep.
So it's the wealthy. The wealthy don't necessarily go and take bank loans to spend.
Yep.
They're sitting on piles of cash. You've been giving them 4.5%, even 5%
Yep.
on their cash. That's now 3.5%. I don't know if it's as beneficial as it used to be, the actual rate cuts. And to the indices, you've got
I don't
companies
think
that
it's
are
material
in
enough
cash.
to quite influence. Yeah, I don't think it will have too much effect. I
Yeah,
agree.
and then the new projects that businesses are undertaking are in AI. So you're dropping interest rates. That's meant to help unemployment.
Yep.
But you're dropping interest rates. You're giving them cheaper cash to go and implement an AI structure to sack people.
Yeah, so it's kind of a new dynamic that we've never really had to think about.
Yeah.
Yeah, as I said, I don't think AI is quite there yet in the sense that it is going to take over, but certainly give it another 5 years. Yeah, then I think it's a different
Yeah.
world.
Oh, we'll have quantum
really is.
computing in 5 years. Yeah.
Absolutely. There's been a lovely comment that's come in, which is inside really making me chuckle. From our very own Luke Moore. Go on, I'll let you read it out.
But it's something about Mary. Good morning, Luke. Luke.
I'm only jealous. Luke's got a wonderful set of hair as well. So
Luke's my new premium client manager.
Oh, super. Okay.
Yeah.
Good. Yeah, he's a good lad, Luke.
Got upgraded. And yeah, Bigger B is saying many business US use loans to keep their businesses going. Look at Russell 2000. That's definitely, look, Russell 2000, half the companies are unprofitable. This really helps the Russell 2000. What it doesn't help, interest rates. I do not understand why that helps the NASDAQ.
Yep.
Because Amazon, Apple, they've got cash. They don't take out loans.
Exactly.
So I just think it might be a little bit different from before.
Yeah,
It's
the
different this
market's
time.
maybe stepping away slightly from being so obsessed about the rate cuts. We finally landed on a clear picture.
Yeah.
Expectation is very much likely to meet what actually arrives. Markets kind of stepped away from that narrative because there isn't really that much of a story there. Would be an almighty shock if we don't see a cut in October and a cut in deck. So
we can't afford any shocks.
Kind of stepped away from that.
What interesting trades are you seeing on these dailies then? Is the volume picking up?
Yeah, definitely. Most of the interest still remains on Tesla and Nvidia. Certainly Tesla. Read some real decent moves there. Tesla vol tends to be far the highest out there out of the single names.
Yeah.
We are seeing two-way. Seeing a little bit more buying coming in the last week or two. So kind of just reflective of exactly what I showed you on that VIX EQ chart. Single name vols definitely ticking up. And as I said, coming into earnings season, I think that's going to carry on. Going back to S&P, so as I said before, implied vol is pretty much rock bottom. We're right on the floor. The skew keeps on getting tweaked up higher though, and that's very much singing from your hymn sheet. It says you're waiting for this correction.
Crash, we're calling it. It's not a correction anymore. If the higher we go, the more towards a crash it is.
So we're still seeing plenty of demand here at IG, but also on exchange for protection. So, for example, in September actually saw record volumes for SPX options on exchange, which is amazing, given where vol is. And if you compare that to all the fun and games that we saw in April, there's more volumes that went through in September than April. Incredible. Wow. And it's because there's so much protection that's being purchased every day. Yeah, so the higher and higher and higher that we go, there's people, you'll do very, okay, you are the only bear that I know of. There are
what does that tell you?
There are very few bears out there on the street.
Yeah.
Everyone that you talk to in the market.
You've had to give up. You've had to.
Yeah.
You've had to throw in the towel.
Exactly.
The blood's on the streets.
Exactly.
I'm watching the Eddie Hearn documentary at the moment on Netflix.
Okay.
Is it Netflix or is it Amazon?
So I went to school with Eddie Hearn.
No way.
He's a few years older than me.
Right.
Yeah, I've got a nice number plate which he tried to buy for me, but I didn't sell it to him. So.
Of course, the same initials.
Same initials. There you go. Yeah.
Ah, brilliant. He's from up your way then.
Used to live on the same road. I grew up in a lovely village called Stock in Essex.
And now your house is bigger.
Not quite. He was a few years older than me.
And is he as Larry?
I think he talks a lot of sense.
No, I do. I like him.
He's done very well with boxing.
Yeah.
He's transformed it, but he's also done very well with snooker. That as a youngster, that was my calling in life, to be a professional snooker player.
Right.
I had a full-size table and I used to practice, honestly, 3-4 hours a day. So when I was 10, I had my own professional coach. I knocked in 65 when I was about that big.
Jeez.
Table. I was just obsessed.
Yeah.
And then I discovered golf and other sports.
And trading.
And beer and, and it went downhill. But, he's done very well, I think. Yeah, no, I have to catch it.
Remind me never to take you on at pool then. I'm not
a bit of a shark on a pool table. Yeah.
Right. Okay, good. That's a good warning. Right, okay, we've got one thing to leave you with.
Yep, go on.
And this is just a little warning of what's to come.
Okay.
So I've already shown it to Beachy this morning, but I think it's good enough to get back up. Goldman Sachs Internet research from April the 12th, 2000. It's their quarterly review. It's been a turbulent Q1 and has seen most internet sectors down by 25%. We recommend adding to positions in leading internet companies in each sector. Fundamentals remain strong going into Q2 and remain comfortable with relative sector growth. You could literally change that word internet
Really good.
for AI, and the rest of the research piece is saying exactly the same thing.
How did you find this?
Oh, well, you know, I was around in those days.
In a
As
drawer
you were. No, it was actually one of the guys on the chat, Gio. I've got to thank for that. But yeah, I did actually run it through ChatGPT and change everything to AI just to see if it and it still reads the same. It's interesting.
That's partly why the skew remains out there, because it's the only real concern that the market's got at the moment. Just touching on Europe, European indices feel rather stuck by comparison against the US.
Yeah.
DAX
There's
realised
not much there, is there?
there's not, and there's not really any new themes. Concerns over German fiscal stimulus.
The cars are terrible. Defence is done.
So the AI bubble is kind of the biggest threat. Yeah. So that's your only card that you've got, Rich. I cannot wait to a lovely lunch. I'm gonna get every side. Watch the chaser.
Yes.
I'm gonna hit
You'll be very welcome to it as well. But I think what that research piece reminds us is, by no means do I think AI is not a thing, or it's not incredible, and it's not going to be a huge part of every company's life. That entirely works, as the internet was back then. It's just that these companies might not necessarily be profitable. They might not be winners. You might have a completely different tech, because let's remember that the current AI is completely unsustainable on an energy level.
Yep.
And somebody like the Chinese can come in and do it much better and do it much more efficiently. And you just
remember
don't
the
need
story that broke about the Chinese AI
DeepSeek.
6 months ago?
Yeah.
That kind of gave it an almighty dent. All forgotten now.
Oh yeah, I completely all forgotten.
So,
and
as you say, yeah.
And even the LLMs, maybe we move away from LLMs and we move on to a different kind of AI technology.
Yep.
And it could be private companies. It could be, it just doesn't necessarily mean that the ones that are driving this NASDAQ higher and higher and higher are going to be the big beneficiaries. And so that's why I think, one negative story, and oh my God, be
It's
nasty.
interesting. The NASDAQ skew isn't as aggressive. And so
That's interesting.
yeah, partly because implied vol is so much higher. Puts don't have to be marked up quite as aggressively.
Right.
But I'd far rather buy the NASDAQ put than an S&P put.
I might look at that. Good.
Yeah.
Excellent.
A hint of value there.
Good stuff. Elliot, thank you very much.
Well, it's a pleasure.
Get on that Eddie Hearn.
Watch that.
It's a good one. Good stuff. Right, that's me for the day. Angela's going to be with you in 2 minutes for the US pre-market, we're calling it now. And Monkey Man saying, "Let there be carnage." I don't know what that's referring to, whether that's Luke Moore as my PCM or the Goldman's internet research piece. But certainly it's going to be a very interesting week. As I say, I'm off tomorrow. I'll see you back on Wednesday, when, remember, we're going to be having the London Stock Exchange camera in here. We're on their social media.
Lovely.
Ringing the opening bell. So we can officially say we're opening the London Stock Exchange from now on. We'll see you Wednesday. Cheers.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto live on Trade Live with IG.
Hey, hey, hey! Welcome back, everyone, and it is the free market here. Let's have a look. We've got 15 seconds, so I'm just going to set up my chart. 6, 5, 4, 3, 2, 1, and here we go, friends. We're off and taking a look at the winners first. We've got Plug Power up there, charging ahead, up 7%. We've also got Clean Spark higher. Riot Blockchain, many of the crypto-related names also moving higher due to Bitcoin. Let's have a look at the losers list now as well. We've got Direction down 1.6%, and we've got AMC down 2% as well. Moderna, which has joined the 24-hour offering, has not yet uncrossed, and we have got Beyond Meat, interestingly enough, up 3.5%. Right, so looking like a pretty risk-on-ish day, although it has to be said that we are still seeing that squeeze higher. Many of you have asked me, oh, well, you know, what do we do, Ange? What do we do if we are waiting to see what happens, but then we're starting to feel this uneasy sense of FOMO, right? This uneasy sense of, you know, oh, we're missing out, what's happening? So I have Ange's Market Espresso. Those of you, thank you very much. Those of you that have been asking me these questions. Having a look at some of the stocks that give good dividend yields. I've also filtered to try and find the ones that also are most defensive in times when we see a global market correction. Taking a look at the UK ones first, because that was what was asked. We will look at US ones tomorrow. But taking a look at M&G first, this gives a rather healthy dividend yield and also very strong H1 net flows there as well. Decent market cap, and the sector that it's in, of course, is asset management. The strong cash flow, people, that tends to be something you want to look out for. And the fact that it's got steady dividends, if you are thinking, right, I want to get in on this, but I don't want to, I want to be in something that's going to give me good growth, good steady dividends, whilst I'm waiting to see what happens on global markets. Second in line, we've got B&M, European Value Retail as well. Also here, another dividend payer. Also, it's this one has a resilient model that operates discount stores that tends to perform well as well during economic slowdowns. If you're thinking about something that you want a dollar average in, or indeed slice into the coming year, and it is also looking at ongoing expansion. It's one with a healthy divvy as well. And last but not least, taking a look at Phoenix Group, dividend yield there above 8%, and also it's got consistent net inflows, so strong cash generation again. Phoenix Group in the insurance and savings market, and they're rebranding to Standard Life March 2026. So take a look at those three if you are looking for some ideas as to how to fix your FOMO. Those of you wanting any other questions, you want me to cover it, please do send them in, because this makes my life easier, it makes it useful for you, and that's what we like here at Trade Live with IG. All these companies I've mentioned here combine defensive business models with divvy yields, so high divvy yields, so you get that nice payback as you're trickling in if dollar averaging is your thing. So it's quite attractive to those focused on income and those seeking stability in global market corrections. Right, so we've got plenty coming up next with Axel Rudolph, because we have that time of day now on Monday, technical analysis. Do get your suggestions in for Axel. We do love those technicals. Kate Murphy, did you have a look at Rolls-Royce? Because on the monthly chart, it is looking interesting with multiple bottoms there being touched. So those of you, if you like this, slam the like and subscribe button, send me your questions, and we'll get it covered every single day.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments like shares, indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Trade of the Week on Monday, the 6th of October. And let's look at the US dollar against the Japanese yen, because we can see here after the election of the first female prime minister in Japan since the Second World War, or I think forever, the market has rallied quite strongly, the Nikkei hitting new highs. But if you look at the currency, the US dollar has appreciated versus the Japanese yen. As you can see here, we're now trading above 150 yen. And what I would like to do is actually fade this trade, because you can see here we've got on the daily financial bed a huge gap. And we are at the same time approaching resistance. And you can see this resistance going back to March of this year, you have the highs from March at 151.31. We've got the highs from the end of March at 151.21. And we've got the highs here to August of 2025, also around 150.92. So there's a lot of resistance up here. And also you've got the low here going back to February of 2025. So all of that may act as resistance going forward. I think fundamentally, yes, we might expect the Bank of Japan to react slightly differently than before the election of the new Japanese Prime Minister. But at the end of the day, fundamentally, I don't think much has really changed. So therefore, that's why I want to fade this one and go short dollar yen with a view of us closing this gap or basically also perhaps sliding back towards the 147 area. Now, before I summarize today's trade of the week, I'd like to look at the ones from the last 2 weeks, both of which have been incorrect. So this one I told you about, the DAX. We went short. It did go down, but it didn't hit our downside target, which was further down. So I have to accept that, I mean, even though I would probably, well, I did actually get out of this one. But yes, we would have been stopped out above the high seen on the 5th of September. So that one is a loss. But you can see we had tight stops on here. We lost 2%, but we were right to have our stops in place because otherwise we could have lost far, far more. As you can see here, the DAX rallying very strongly and trading in near 2 months highs. We also wanted to, or we did go short last week, the Russell, because I also thought we were topping out here. We had this negative divergence here on the relative strength index. And we did once again come down in the direction of our setups here. But basically what happened is then we rallied and we had our stop just above the high. So we just got stopped out here. Intraday, even though we haven't had a daily high above our stop, above this high going back to the 23rd of September, but intraday we did got stopped out on this one, on the Russell as well, so we lost another 2% on this. Despite these 2% losses, I think we are still up around 30% year to date. So basically coming back to today's trade of the week is to go short dollar yen at around current levels at 150.15. With a stop loss around 151.32 and a downside target around 148 or 147 yen. Hello and welcome to Technically Speaking, where you can send your technical questions into me and I'll do my best to analyze those from a technical and not from a fundamental perspective. So yes, I mean, some people might wonder, why do I want to go against the trend? Because clearly dollar yen on trade of the week just now, yeah, the trend is pointing higher. Yes, but from where is it pointing higher? You can see from the mid-September lows, we went up, back down again, made a higher low, and then we're back up again. So yes, from mid-September, we're trading higher. But if you look at the bigger picture, and that's always important to do, when you look at technical analysis, you need to look at the bigger picture. You look at the longer term time frames, and you need to make sure that on the longer term time frame, you can spot things that you might not be able to spot on your short term charts. So what have we actually seen on this chart? Well, from the August highs, we've been sideways trading, and mainly towards the lower end of that sideways trading range around 140 yen. But now we're trading towards the upper range. But because that high here was very close to the highs seen at the beginning and end of March, that is quite a lot of resistance. And I wouldn't be surprised if once again dollar yen were to fail there. And especially since we had this gap, and quite often, unless it's a breakaway gap and it's a new gap for a new big trend, which I honestly can't see happening because we are trading towards the highs, you know, longer term with regards to dollar yen. Yes, in the medium term, we still have a long way to go. So it is possibly a breakaway gap. But for me, the odds are more likely that basically all we're doing is consolidating against this downtrend here that we've had in place since the beginning of the year. And every time we sort of head into this area here around 151 yen, we tend to fail. So that's why I wanted to go short. Because of this previous resistance here. I might be wrong on my view, as I have been on the Russell 2000 and the DAX 40, But to me, from a reward to risk perspective, it also makes sense because my stop is just over 100. No, actually, it's just over 100 pips away. Let's say 115 pips or so. Yet, if I get it right, I'm making 200 and 250, 300 pips. So from that point of view, that makes sense as well. Now, enough about me. Let's look at your charts. And the first one here, I'll do them in the order I receive them. So the earlier you send your questions in, the sooner I will answer these. And as we can see here, we've got defense holdings. And defense holdings, if you're long, depends from where you're long at. Well, what we can see here is a spike reversal to the downside. So what's happened? Basically, can you see here, we had a very healthy uptrend and we saw 5 waves to the upside. So this is the first wave, second wave correction, third wave, which is the longest wave, fourth wave correction, fifth wave. So now what we'd expect to see is an ABC correction, at least a 3-legged correction. But what we've seen here is even though we went up in 4 days to this new record high, we've now come down in 4 days and are doing so today as well. And today, we haven't closed today yet, but today it looks as if we are going to close below the last reaction low. So if you have a spike up and a very swift move down again, and below the low of that up move here, from where it sort of had its last kink in the uptrend, that is negative because we're falling through the 4th wave low here. And basically, it is more likely to continue now. Short term, we're testing the highs seen in early September. That might act as support here around the 23,600 area on the daily financial bed. I should say 2.30 area on the daily financial bed. Sorry. But basically, the momentum is very, very steep to the downside. As you can see here on Friday, we fell quite sharply. So if you're long from lower down, perhaps it may make sense to cash in your profits because the odds are further downside is going to be seen. If you're short from anywhere up here, let it run. Move perhaps your stops to the last relative high. So that would probably be short term, at least that high here seen on the 24th of September or perhaps Friday's high. But yes, it does look as if we're reversing lower again. Defense holdings not looking as bullish as it did before. So yeah, be careful on that one. Let's look at another one. Our Robinhood, which a lot of people are looking at and interested in, and that's still heading higher. I know we talked about it last week, I believe, or was it here? Yes, here. So we had a bullish momentum breakout, continues, and yes, you know, you can always say, oh, it can't go any higher. Well, it can. Look at it. It's just there's always a pause, and then it registers higher again, pause, and another move higher. And if you look on the monthly chart, you can clearly see that Robinhood is trading record highs, and we are currently on track for our 7th consecutive month. But let's not jump the gun. This is the beginning of the month. But from a seasonal perspective, you look at the S&P 500, for example, since 1928, the S&P has tended to outperform in the last quarter of the year on average by nearly 3%. Or the 2.3% is one of the two. But anyway, it's definitely bullish. And Robinhood clearly looking bullish. You can see here the candles on the weekly chart also bullish. So Robinhood, well, the problem is if you're long, where do you put your stop? Well, you know, profit stop below the last relative low. So that would be the 25th of September low on the daily financial bet down here around 12,063. But that's a long, long way away. Otherwise, why don't you use a trailing take profit stop? You can do that on the platform or on your phone with IG and just move your stop up with the distance that the market moves up. So what you can do in order to distinguish what sort of distance we're talking about, what you can do is look at here, if you look at the indicators, the second from the top, average true range. And I look at an average true range of 10 days, not 14. So let's make that 10. What this does, it looks, this upper line here, looks at the average of the last 10 days of the true range, meaning including gaps from high to low, anything like that. And you can see on Robinhood, the average at the moment is coming down. It was last week around 626 points, and this week it's around 569 points. Why? Because can you see here the candles are becoming smaller, so the average true range is becoming smaller as well. And you can see here the average true range spiked up from around 475 points to, let's say, 600 or so, because here we suddenly had a big move up. So if you take the last 10 days here, you had small ranges and then a big range. So the average true range also increased. And you can see here basically that right now we have an average true range of, let's say, 570 points. So what you could do is place your stop just above that, because the average rate is 570 points. Let's say, for argument's sake, 600 points. So unless you have a big move against the average range, you could perhaps place your average true range, take profit stop 1.5 times away from the average true range. So 1.5 times 600 points is 900 points away. So if you're trading here at 15,000, let's say 100, you would then look at 14,200 as your average true range stop if you were to use it with a 1.5 average true range. If you want to make wider, twice the average true range, so that would be 1,200 points. So let's say that would then be 13,900, something down here, I think. So basically, you can look at the average true range in order to decide how far you want to move your stop, because if the average of the last 10 days is X number, then the market is likely to continue to trade in that range, at least in the short-term future. And then if you have a move which is bigger than the average true range by, say, for example, 1.5 times or 2 times, then something's probably going to change. So especially if you have a sharp candle to the downside after these long candles to the upside. So you can use this to move your profit stops up, and you can do that automatically with a trailing stop on the platform. If you don't want to do that, what I tend to do is I look at the last, not the last, but the second to last relative low, this one here, but that's such a long way away, so that would be quite difficult. So what you can then do is go down a time frame, maybe look at the hourly chart, and on the hourly chart, let's look at go to the left and look at the last relative low. A relative low, as we know, is a low which is lower than the one to its left and to the right with regards to the candle. So this one is the first relative low, because that's lower than the one to the left and to the right. And then you've got a slightly lower one down here. It's this one here. So here, with this strategy, my take profit stop would be below this low at 14,525. So you can do that as well. So these are just different techniques of letting your profits run. And it's always very important to let your profits run, because you might be tempted in situations like this where a candle goes against you short term. Oh, let's just go out. It's going to top out here. But most of the time, the trend is going to continue. So just be aware of that. And let's also look at DRAX, because I've been asked to look at it from a weekly time frame. DRAX group, let's just do that together. I haven't looked at this chart for a very long time, so let's do that together. Let's actually start on the monthly, and we can see on the monthly we had a record high back in, well, it was a long time ago. It was in 2005 or 6. Then we had another high here in 2014 and another high here in 2022. Now, since then, we have gone down into a downtrend into the lows of October 2023. And since then, we are in an uptrend, as you can see, a series of higher highs and higher lows. So now let's look at the weekly chart. And the question I've got is, looks like it's hitting a medium-term resistance in an uptrend channel. So let's just do this together. Let's draw in the channel first of all. And let's have a look at our trend. Sorry, let's just make it a channel straight away. So we take the lowest point, connect it up with the next higher low without any data going through it. And then we just move this channel to the highest point here. So the actual channel resistance, that line here, which may act as a resistance in the future, is a long way away. But what you are referring to is probably this high. Let's just do this here. This high going back to the end of July with, I don't know which highs, because these highs are lower down. So let's go further to the left and look at this high here. So that one here. So basically, if we look at the highs going back to January of 2023, and this high on the daily financial bed was made around 728, I believe, and that with the high seen in July around 723, that area may act as resistance. Now, should it go out or get out of your trades, let's just get rid of the average true range to have a bit more space on the chart. And what we can see here on the weekly chart is a sharp move down, but then a gradual advance, except for 1 week, taking us above these highs. So to me, that still looks bullish because we have
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits.
Welcome back to Technically Speaking, and we were just talking about DRAX and the weekly chart and whether we're hitting resistance in the 723 to 728 area, previous highs on the yearly chart. But I was saying basically we are on the daily chart, as you can see here, still trending higher. So there is no reason for me to get out of my longs if I were long, because we have a clear advance here, higher highs, higher lows. So what we can do is basically either just draw in a trend line and see whether that trend line gets broken through, or look at the last relative highs and lows, as I showed you before, or use the strategy with the average true range and look at 1.5 times or twice the average true range and see whether the market comes down against the trend to those levels, in which case you could have a trailing stop loss with that. But basically here, yes, we are entering a potential resistance area, but the trend's your friend. So I would look, if you look at the last relative low as your stop loss, at this one, and then the next lower one, this one here. So I would have my stop probably below the 19th of September low. Shorter term, if you're still long here, and you're just long from a short-term perspective, well, you still have an accelerated uptrend line. I mean, I would probably have my stop just below the 2nd of October low, because that's the last one when we were sort of negative on that day and then went back up again. But right now, honestly, it looks more likely that this trend is going to continue in the days ahead, and then we'll have to see what happens in the 723 to 728 area. So the trend is your friend. Maybe if you are concerned about it reversing, take partial profits, because people forget that quite often. Let's say you have a £10 per bet on. What you could do is perhaps get out of £3 per bet and let 7 run. Or if you're really convinced it's going to stop going up here, get out of 7 and let £3 run. But if you let a small percentage, 10, 20, 30% of your position run, then quite often that may actually make you more money than the original 70% or 80 or 90% you had on, because markets tend to go further than we think they do, because we quite often get spooked out by small reversals against the trend, when the actual trend, as you can see here on the daily chart, is still pointing higher. So just bear that in mind. Netflix, another interesting one, earnings soon coming up again. Another 20-hour market stock here for IG. Now, Netflix has come down, as you can see here, and is not looking as bullish as these other charts we were looking at. And basically on the Netflix chart, as you can see here, we had a lower high. We had tried to correct higher, but this is just an ABC correction. And since then, we're going back down again. Now, interestingly enough, last week we tested the lows from early August, but we seem to have held there, even though intraday we went below that low, which is why I always want to see a close below a previous low, because the intraday move alone is not important. What does that actually say? Well, as long as we stay above that low seen from Thursday of last week on the daily financial bet here, that was made around 113,458, for example. As long as we stay above that, for me, the uptrend is still intact. That's just a sideways trading range, and we may still go higher. If that were to give way, though, because we are on the short-term downtrend now since the beginning of September, as you can see here, the odds are that we're going to test that support area here. These lows going back to May of this year, that's quite possible. So we're talking 111,000 or slightly lower. We may even dip down to the 5th of May low and also the high seen in February of this year. So basically that would take us all the way down to 106,580. So that is a distinct possibility if this support here were to fail. Even if this is just an ABC, a larger ABC correction, because you would take the distance from that to that and project that down from there. That gives you another downside target area, which is around here, which is where these support areas are. So just be aware of that. Right now, Netflix looks more bearish short-term than bullish. If short-term, the bullish momentum here that we're trying to build today were to continue, well, what would happen? Well, we have a lot of resistance here. We've got the 15th of September low, the low from the 2nd of September, all these lows going back to late August, together with the lows seen here on the 25th of September, which are likely to act as resistance. So unless we take out the last relative high, which was made here on the 29th of September, or the Monday high from last week, and that was at around 122,290. As long as we don't take that one out, for me, the downtrend is still intact and looking further towards downside. Usually I stop here, but because I've got you on, we might as well continue. Greg's, I have to admit, I've never eaten at Greg's. Maybe I should do that. Everybody does. But yeah, health conscious as I am, sometimes at least, I haven't. But what is the Greg's share price doing? Well, let's look at the long-term chart. This is the monthly chart, and you can see here, Greg's came down from its December 2021 high down to the September 22 low. Then we had this ABC correction to the upside, and then we have another big move down. And we can see we've got 1, 2, 3, 4, 5 waves to the downside right now. Now, we did fall through that previous support low from the 22 low and did so in July of this year. And then we sort of consolidated below here. We're trying to bounce back. So short term, it looks as if we could bounce back. If you look at the weekly chart, we are trying to form a bottom. We did actually form a bottom. I can show you that on the daily chart, a saucer bottom. Why? Because we went down, traded sideways, tried to break out to the upside. We made a higher high here, but then failed and made a lower low there, or retested this low. And then we reverted above this high on earnings last week. So that basically is confirming, because we closed here above that high, that we did probably form a double bottom. So the upside target of this double bottom would be the distance from the lowest point of that double bottom to this midpoint here. And that distance here, we then project to the upside. Now, you could argue that we practically hit that high already on Wednesday, and that might be it. Possible. If not, we could go higher still. So short term, basically, I would say as long as you stay above this huge candle low here from Wednesday of last week, which on the daily financial bet was made at 1,604, as long as we stay above there, the preferred view would still be that we are in a bottoming formation, that we could go higher. What we then want to see is a rise above last week's high, and then we could, in that scenario, retest these highs and perhaps the 2,000 mark, these highs going back to June of this year. So that is a possibility. Now, why this low here? Why not below these lows here? Well, you could put your stop if you're long below these lows here, but this is the low. This is when we had, you know, the earnings and everything. This is when the big move of the big candle happened. This is when momentum took us higher. So we don't really ideally want to go below that, because that would indicate that this bullish momentum here has been negated by the chart. So that's why I personally would place a stop here if I were long. If you're short, your stop loss is probably just above the high from last week. and you could even make it a stop and reverse order, because in that case, as I say, if that gets taken out to the upside, it's likely to continue to go higher. Now, another question I've got to look at Dell, and let's see at the Dell another 24 hours chart, and Dell share price. And you can see here Dell heading higher, coming off its high. But can you see on the relative strength index, we made a higher high, so it confirms the uptrend. So that's bullish. If you go on a weekly chart, we can see here that we did fail around the previous high going back to November of 2024. So that's why we came off here. That was just resistance. But the trend is your friend. And you can see Dell is looking bullish since April of this year, clearly heading higher. And on the daily chart, the trend is still very much intact. So the uptrend is more likely to continue than for it to fail, especially, as I said, there is no negative divergence here. The oscillator is confirming the uptrend. So all we're seeing is now perhaps another buying opportunity. It's just a reversal, short-term, a consolidation of this sharp up move here. But we're currently testing these previous highs, so that's support probably. So this to me would more look like a buying opportunity than a selling opportunity. If you go long here, though, your stop needs to be placed below the last big reaction low from a medium-term perspective, and that would be the low from early September. As long as we stay above there, basically we stay in an uptrend, and we could continue higher because all we're seeing is just a correction against a pretty solid uptrend taking us above previous resistance area, which now, because of inverse polarity, acts as support. So my opinion, but I'm again not giving you any advice, my opinion from a technical perspective, because we're seeing a series of higher highs and higher lows, which is the definition of an uptrend, is that this trend is more likely to continue than not, provided we stay above the early September lows. So one last one I'm going to answer. It's Mitsubishi, heavy industry. Mitsubishi Heavy Industries. Let me just look at this one. I have to admit, this is not one I usually look at. What can we see on the monthly chart? Huge downward candle in February of 2024. And since then, we formed the bottom and we're heading higher. We're back in an uptrend. We've had, so far, we're on track for our 8th consecutive month of rising prices. You can see here on the weekly chart, we gapped higher, but we're testing the support from the early August lows. And on the daily chart, we can see it's not a very liquid stock because we've got all of these gaps here everywhere. But even with gaps, you can analyze the chart and you can see that we remain within an uptrend. And we can see here that this uptrend is solid. We have a gap higher. Basically, to me, this still looks bullish because we have to see that's Sunday trading, where we will trade today. So look at the chart today. Don't look at the Sunday trading one, because that has to do with the Prime Minister in Japan being elected, the first female Prime Minister ever. Basically, yes, for me, the chart basically needs to be confirmed here today on the daily chart basis, but it's likely to trade higher. And here, if you're long, your stop would probably be the last reaction low, the important one here, which is the 2nd of September low. And as long as we stay above there, basically the trend is your friend, and that's pointing higher. So how high could we go? Well, basically, if I look at my chart here, you would go to the left of your chart, the low in March of this year. And that low is slightly above where we are now. So that's around 4,440 on the daily financial bed. And then above there, potentially, you've got all of this, the middle of this sideways trading range, which could take us towards the 5,000 mark on the daily financial bed. So these would be the upside targets for Mitsubishi Heavy Industries. But you can see here the trend is your friend, and that's still pointing higher. I think I've answered all your questions. Thank you very much for watching Technically Speaking, and I hope to see you again next week. Thank you. Goodbye.